All right, cool. Let's see. Yeah, so it looks like this is finally giving those bearish signs, right? It's finally giving that distribution kind of feeling. I don't really want to call it distribution, even though it's a little just because it looks a little too much like a flag to me. It's why I don't want to consider it a scam. But it does follow the criteria, right? Preliminary supply, buying climax, secondary test, up thrust. This is your automatic rally. No initial SOW, which is fine. That's not really what I look for, especially based off how structure works. So obviously your up thrust here, UTAD test is probably inside there somewhere, and we didn't give an SOW, but we left liquidity there, and or maybe it took out the liquidity, who knows. But still, this is still a very deep retracement. So honestly, any pullback here could be considered LPSY, mitigation of the LPSY, and the mitigation of that. All right, which then leads to the downside move. And as soon as we take out that low, that is your SOW. All right, and then from there, I wouldn't expect any more big pullbacks before we just continue lower. Right, so the weird thing here is, like, I don't know, because this is a pretty big scam. Like, this took a pretty decent amount of time to complete. Right, this was 50 days, almost 2 months. Right, essentially 2 months. Yeah, 2 months. And so you're gonna see a pretty big move, you know, unless obviously this just somehow wrecks and gives just a pullback, touches somewhere here, and then lift off. But that would only be due to the fact that we're still bullish on this, right? Until that structural low breaks, or honestly, even if this here breaks, if you come back this far, we're probably going to be bearish, right? At least back to down here. But overall, looks like the intraday should be bearish for the next couple of days, probably next week included. Right, because this is Wednesday. And this weekly closure, yeah, is looking pretty bearish. So this could be the start of a pretty decent pullback. And then we go from there. Same thing goes for dollar. Right, I don't really want to consider this accumulation. Doesn't look as nice, but it still follows the criteria, right? Pre-supply, selling climax, secondary test there, automatic rally there, ST phase B, well, yeah, ST2, then your spring, optimism shown here, but there's liquidity sitting there, so that's weird to me. Probably this will probably be a target for when after this move happens, whatever happens there, this will probably be a target for that. But if we break this high, then I'm not going to be too worried about these lows here. But the optimism is shown. This could be the start of your SOS, and then give a move up, right? With this being your LPS, right? LPS2. DXY is going to be bullish, up and back testing, and every year dollar rallies around this time. Yeah, I'll believe that. I'll believe that. Good. But I do want to go over my EG trade, which was from which is currently 160 pips in profit there. So this will be just pretty much like an abbreviated version, because if this move does as I want it to, I'll probably make like a video on it, and that'll obviously be included once I fix everything. But yeah, let's see. This is like honestly top down. Obviously I've been bearish on this for, you know, in terms of macro basis, I am bearish, right? Eventually this will be one of my targets. Actually not there, I'm sorry. Here. That'll be a, you know, pretty solid target for the long term, right? And the crazy thing is based off distribution, this would be only the full SOW, which is pretty crazy. But right, preliminary supply, buying climax, secondary test, this is your automatic rally, right, up thrust, UTAD, and I'm aiming for the LPSY there, right? Obviously, the only reason I'm doing this, right, isn't because of the scam itself, is because of the structure, right? We had this breaker structure here, a liquidity grab, so I'm thinking mitigation of the liquidity grab so that we can then fully get a move, which supports, you know, pretty much that entire bias. All right, which fills in with potential target long term, right? Obviously the wick of rejection, diminishment of bullish volume. All right, we go to the daily, I'm sorry. And essentially what I was looking for here, right? This was my first point of interest from this time frame. I was looking for, you know, price to come back into this wick because there's obviously 2 points of interest for me here, right? This long wick is not relevant to me anymore because I consider that the mitigation of that. And then this wick could be the mitigation of this wick. And the reason I'm saying that is just going based off closures and opens of the candle themselves, right? Which is, this is the closure of this bullish candle. This is the open, right? So when we focus on sponsored candles and the idea behind the sponsored candle is obviously the push up to push down, which is a wick on a higher time frame of the time frame we're looking at it now, right? So with that, considering that, I consider this wick to have something inside that could benefit me for the long run, because obviously this bias is supported by this liquidity grab from the monthly time frame that gave very impulsive move to the downside, and we've been struggling to come back up, right? So this down move was this big and this up move is that big, right? I don't need to go into specifics there. You guys know, you know what's going on. So unfortunately, right, I was trying to play something here, right, and I never got it. I never got the opportunity that I wanted, so I never got to even catch this, which is good because this obviously rallied, right, with very low volume, right, meaning there's probably a reason behind it, which is potential SE there from my eyes, right? So once we reach here, I'm gonna go straight to the 15-minute. I'm actually pretty disappointed that I didn't get to catch the high, the extreme high, because there was a very good reaction here. Right, we had the touch into the point of interest, and we had impulsive move there, right? So the only way that I will ever try to play pretty much an SC in this scenario is because this is happening. There's a, you know, pretty solid amount of momentum, right? There's two pretty big bearish candles, and then the correction is pretty slow. That would be the only reason I ever take that, right? And even just looking at this time frame, right, that wick took out the previous wick, right? That would have been the scenario there, and that's like a 2 pip, I believe, is it? No, I'm sorry, 5 pip. 5 pip scenario there, you know. Oh well. But obviously I didn't get this because it's, as you can see, it's 5 in the morning at my time here, and that's not when I trade for the most part. Which is where I did get an entry was here at this green line, which was here, right? And that's because it was during session. Not saying that the best time EG moves is during this time, but this is when the most volume kicks in, and that's what I care about. So we're here before session, right? The first thing I notice from this intraday stance is the fact that we just went up to come down, right, with very impulsive move. So we didn't have the structure break, but I'm anticipating the future structure break because of the momentum, right? So my first point of reference. Oh, that's so annoying. Right, was 15% of this inefficiency here. Right, and also another confirmation was the fact that, like I said, in terms of structure, right, you never want these to meet. Ideally, for the most part, if you're in a very good trending market. Right, so if this kicks up, you would want this to kick all the way up and then come back to this relative area before continuing higher, right? But as I said, we went up just to come down with momentum, and we came below that previous high, right? So I'm anticipating something to occur here. Right, I zoom in on the time frame there. Right, and now I see another inefficiency here. Right, so I'm gonna highlight the closure because that's relatively around the 50%, and that's the confluence that I try to pursue. Right, that's what I tell you guys about, is trying to get that confluence between time frames. Right, because at the end of the day, these are just clues. These are never absolute. So the more the better, right? So the 15-minute inefficiency, 5-minute there. So I could keep going smaller and smaller, but I now have a relative area of interest. Right? So like I said, it's about the reaction. So I'm not too worried about, trying to take a limit here and put my stop loss there. Right? It's not what I'm trying to do. So we're in session, right? I'm going to take that off. And now I need a sign, right? I need a reason to risk, right? So right, we have price come up, pull back, came back up, gave a liquidity grab here. Right, gave a liquidity grab there. So I'm going to take off this zone, and I'm now given a point of reference if the next low breaks, because that would be a structure break, right? But now, just to show this, right, liquidity grab there, right? We closed extremely bearish here, right? And I'm going to go to the second time frame for this. So as we see price, right, liquidity grab engulfing here, right, pretty strong bearish volume in comparison to what the norm is, right, previously. We come down, create equal lows, right, pull back, leave liquidity behind. Right, left liquidity here. Right, and then we did the structure break. Right, this was the structure break. So now, and keep in mind, like I have to think pretty fast here. This is the 30-second time frame, right? We had this, right? So automatically, right, I want to enter anywhere inside a premium, right? Because I now have the structure break, the liquidity grab from the 15-minute inefficiency that's supported by obviously the daily bias from the daily candle and the monthly bias from the monthly distribution, right? So you see how all that comes together. And so now I'm just looking for the excuse to risk, right? I've done the hard work. Now what I'm aiming for is to get in the trade itself, right? So preferably, right, I want 50% there. But in this scenario, this is a 30-second time frame. We're not going to be in the zone for any more than 5 seconds. So to get that precise 50% there, there's almost no way I'm going to get it, right? So as long as I take out this liquidity, right, I am going to risk, right? And that's where I risked as soon as that was taken. And that was literally like a 5-second move. Yeah, literally like a 5-second move. And from there, right, my initial target in terms of intraday is here, right? So back to this, right? My entry is here. My stop loss is above that previous candle. Yep, 3 pips. That's what I remember. Yep. And my initial target is, like I said, the intraday target, right? But keep in mind, right, this is a monthly, you know, I derived this from the monthly time frame, right? Therefore, I'm trying to hold this for at least a month and a half, at least, right? Because I'm aiming to take out, you know, those daily highs, but I'm going to show you right now. So this initial target for me, right, I wouldn't consider this a target. I consider this more the first full-on structure break, which would then lead me to my stop loss at break even, right? So normally I would probably do it over here, but since I'm trying to hold this forever, I don't mind staying in risk for another day, right? But let me take off this. Right, so that next target would have been there. This would have been technically the real intraday target here, right? 18 to 1, right? But as for me, my first target is down there. These relative equal lows here, right? This is my first target, which is already a 60 to 1, right? But obviously it's going to take time, which it already took at least 3 days, 4 days, 5 days, right? 5 days to get there. Whereas my true target initial target, I'm sorry, from a swing basis is here, which is already at 133 to 1, right? And now imagine if I'm psycho enough to hold it to these equal lows. And why would I hold it to these equal lows? Because remember, our bias, right, is the distribution occurring, right? Obviously it hasn't happened yet, but that's the goal. That's the entire point of this trade, right? And if that is even done with volume, then now we understand based off logic, right, that if a distribution occurs, especially at a higher time frame, right, you now have a bias for a very long time, right? What's a good reference for that? Where is this? Gold. Monthly accumulation, and look at what happened. You now had a bias from October 2018 to today, right? Which is ideally what I want to happen here. Let me see. Oops. This is so annoying. Right, so this is what I want to happen here. Because then if we come out with volume, then your next target, obviously I don't think I would hold this long. Right, wouldn't really make sense to me. Right, would be there. Right, and you see how this number, you know, this is what people love to see, right? That's what people love to see, right? 780 to 1. You know, this is what people market. Right? But this is not what I'm worried about. What I'm worried about is the scenario itself, because it's the scenario itself that creates these numbers, right? So just, that's a cool way to look at it. So yeah, pretty much that explains that whole thing. To the spread to it. Yeah, bro, you always add spread. But yeah, that's that little breakdown. So a year from now, we're gonna know if I was right or not. But yeah, there you go. Monthly to 30-second time frame. Do you guys have any questions? Because that's pretty much all I had for today. I didn't really have time to think of anything. Cool. Let's see, who do we have on call? Got like 16 people, 15 people. But yeah, that's dope. How are you guys doing though? Do you guys need anything from me in terms of content? Or cause honestly, over the past couple weeks, I've seen people, really start to finally have it click. And I mean, naturally that happens because this is so new, but where's my phone? But yeah, guys, you guys have any questions at all? Anything? Because if not, we can end it off there. I think that's a pretty good breakdown. That whole thing, though, like in detail, will be an actual pair breakdown video, and that's hoping my daily target hits. More entry videos. That's the pair breakdowns, bro. There's literally, honestly, I don't even know how many there are. Lost count. Alright, can't show y'all that. Right, every pair breakdown has entries in it. At least from what I know. Correct me if I'm wrong. But that's 10. That's 10. And Raj sent me his video, but I need him to go over some stuff. And then I'm obviously going to make this one. Probably make a EURUSD one. But there's entries in literally every single one of these, bro. I don't know what... Oops. My bad. I don't know what more you would want than these. Not to mention there's a lot of Zooms that discuss that, bro. I think I've discussed entries the past 2 to 3 Zooms. You didn't even know those were there. Come on, bro. So that means you haven't even been through the whole course. That means you haven't been through the whole course then. Webinars. Come on, bro. Everything is here for a reason. Same for the Discord. Alright, don't sleep on these. Correlating position timeframes. Yeah, you see, the only issue with talking more about that is the fact that they don't happen too often. Right, the last time that I really emphasized on position timeframe bias, right, the last time was the whole EU move, this entire move here. Right, so all the previous Zooms from this time, right, I emphasized on that monthly 50%, the 2 week, I believe it was. The 2 week 50%. Right, during this time, that's when we really emphasized to be patient for that long-term move, and look at where we are now. Right, and then before that, what was a big move that we caught? I think we caught one on... Did we ever catch one on... Oh, yeah, we did. Yeah, we did. Hold on. It was one of these here. We caught a pretty decent move here. And a couple of people caught this entire move here. And then before that was the whole gold scenario, because I've been buying that since I've started trading pretty much. Literally since the month I started trading, October 2018. We got a nice EA sell. Oh, that's right. That's right. I mean, yeah, but that was pre-launch, so I don't have a video for that. That was like somewhere here. Or was it? Because there was a pretty big one that we caught. I forgot which one it was, honestly. But yeah, I do remember that EA move. Honestly, during March of 2019-ish, like during here, like this was when I was fully, like this EA swing, if I find it, that was the first time I ever had like a 3 pip stop on anything. And this went for like 600 pips. Yeah, I don't remember. I'd have to go through my highlights. But yeah, the markets are getting pretty cool. Like, obviously some have been sloppy, but honestly, in a couple of months, I really think we're going to start trending again, like we were back in like 2018. Once everything resets after Rona. Yeah, this looks so bare. Yeah. Just rinse and repeat. That's why you gotta think of the longevity to it. Just learn now, pay your dues, blow those accounts. No, no, don't blow those accounts, alright? But you know what I mean? Like, pay your dues now. You think you get entries been practicing? It's easy to see how this played out. But I mean, that's how you start though. Before you know how to do something, you gotta look at it and understand it. Yeah, I mean, there's nothing wrong with that. Like, there's guys in the chat that just load up small accounts and just flip them, right? Because the margin of error is so small that you can cut losses so quick, so you can put so much more risk on a smaller account. And at the end of the day, bro, it's not about the snipes. It's about catching the move. And it's about having logic behind the move that you're trying to catch. You speak about higher time frames. Higher. I mean, that's what I'm saying though, bro. With the whole EU, the entire move up, like we emphasized on that higher time frame bias for the longest. Yeah, sniper entries. It's not what it's about. But I mean, honestly, if as long as you focus on trying to find a bias and POIs from these time frames, you're fine. You'll get these opportunities. If you trade 2 to 3 pairs, you'll get at least one scenario at least one. I would say probably once a week at least. If you're trading 2 to 3 pairs, actually you get 2 to 3 good scenarios per week. You close your EU buy that you had? Yes, sadly. Well, close like 90% of it, so it's like it ain't really shit anymore. But yeah, I think that's all good for today. But you see, if I were to have held that entire EU position, right now would be a perfect time to close that. Like if I was holding the whole thing, or right now is like the perfect time to take majority of your volume off, because you have a higher time frame distribution occurring and you're having these H4 structure breaks occur to the downside. So, but yeah, I guess we can end it off there. Hopefully you guys enjoyed. Yeah, man, no problem.